So, good morning, friends, and welcome back to SMS, the Saturday morning sessions that the GST faculty group is being organizing. And it's just because of your immense support that we kind of continuously are handling this session or having this session. Of course, we are also being supported ably by our group members who are deserving speakers across India. So today we have Vishal Poddaji from Nasik. He is going to take us through the composition scheme. Today is the second part of the discussion. So Vishalji, over to you without any time loss. And since you are known to all our faculty members, I'm not going for any formal introduction today.
No, not
So over
required,
to you,
sir. In our
Vishalji.
group, not required, sir. Thank you.
Yeah. Thank
Friends, I'll just scroll through what we discussed in the previous session just for a brief brushing up. So we are talking about the entire composition scheme. I'm not laying thrust on the procedural part because there is something more in the legal part of it. So we are going to discuss all these pointers. We discussed that what is basically composition. Composition is a legal agreement to pay a sum instead of a higher debt or obligation. So this is what we see, that what composition is. We are paying a lower amount instead of the actual amount, which is a much higher amount. The basic purpose of introducing composition in different tax regimes is to provide hand-holding to unorganized sector businesses, also to make the computation simplified. So even a person who is unable to hire a tax professional should be able to comply with the tax laws and pay the taxes. Most importantly, even prior to GST, we had composition. Rather, we are still having composition like in income tax. The section 44 AD, ADA, I believe are equivalent to composition. And I hope and wish that maybe in future, the income tax and the GST composition schemes are aligned so far as the turnover requirement is concerned, so that the business would be having an equilibrium position, whether it comes to direct tax or indirect tax. Similarly, in the previous tax regimes, for VAT and service tax, we had the composition scheme for the builders, that is the works contractors, similar to what we have right now in the real estate. A similar scheme was there in the previous regime also. And in excise, we had composition schemes selectively, like for textile sector, we had subject to some conditions. And in excise, there was a very special point relating to composition scheme. Over there, the composition scheme was termed as compounded levy scheme, whereby the simplified calculation was based on the capacity of production. In fact, if you see the history, initially, composition scheme was not made open to manufacturers and service providers. It was allowed only to traders, because prior to GST, commonly composition under VAT was for traders and selectively for manufacturers. However, later on, at the time of implementing the GST law, they finally decided to extend the benefit of composition even to manufacturer. But then the second question was that if they want to extend it to manufacturer, whether it would be similar to that under excise, that is on the basis of capacity of production. However, they finally decided that it won't be on the basis of capacity of production, but it would be on turnover basis only, like how we are having today under GST. So now the composition scheme under GST is equivalently applicable to all traders, service providers, and even manufacturer, and it is a turnover based scheme rather than equivalent to the compounded levy scheme, which was applicable under excise. Similarly, if you note that this particular composition scheme, again, if I go to an historical part, before the implementation of the GST law, they had said that the composition would be on the basis of permission given by the appropriate officer. However, at the time of implementing, they again changed this. They decided that instead of permission based, we will make the composition scheme option based. So prior to the implementation of GST law, the draft model required that composition would be on the basis of permission, and it would be only if the proper officer felt he would allow the permission of composition. However, now they have finally settled on this, that it will not be on permission basis, it would be on your own choice basis. If you decide, you may go for the composition on your choice. No need to take any permission, and there is no authority with the officer to allow or disallow you composition. Then in the comparative sections, we found that prior to the amendments in GST law, just a minute, please. Sorry. So now let us have a comparative understanding of the composition and let us go to the nuances of this composition. This also we discussed in the previous session, so I'll just brush up through this. So we have two types of composition. On the left hand side of your screen, you can see the composition which is under 10.1, 10.2, which is the original composition scheme designed majorly for supplier of goods, which included traders, manufacturers, and only one service, that was restaurant and catering. However, from the amendment, the first GST Amendment Act, applicable from 1st of February 2019, they have brought in the second composition scheme, which is under section 10 bracket 2A, which is now applicable to service provider. This is what we term it as. However, there is nothing such specified. It simply says whoever who cannot be covered under 10.1 can take the benefit under 10.2A. So it is open for service providers. It is open for people who are into goods and service both. So it is a generic composition scheme under 10.2A. Now we analyze certain important points. I'll just brush them up. So prior to amendment, this particular point was different. It said that in lieu of tax payable by him, the supplier was supposed to pay an amount calculated at such rate, which was given. So amendment says, the first amendment, that is from 1st of February 2019, they made an amendment which said that in lieu of tax payable by him under subsection 1 of section 9. So earlier, the interpretation that was coming in the original GST law was that against any tax payable under the GST, the composition dealer is only required to pay that 1% or 2%. However, post this amendment, it is now very specific that composition is only overriding the tax liability under section 9(1). So any other tax liability like reverse charge mechanism would continue to apply to the composition dealer as well. So this was a clarificatory amendment. Second interesting thing which we deliberated on is that I had raised this particular issue when we were discussing that if you read the bare provisions, it uses the word a registered person. So in a sense, we get an impression that the composition scheme is allowed as an option only to a person who is registered. So I had raised this first issue that what will happen to those persons who are taking up registration for the first time, whether they will not be covered. So ultimately we concluded that no, they will also be covered. But then what is the purpose of putting this, the word a registered person, so that in future, if somebody who is deliberately trying to evade tax and when he is caught, at that time, he should not be allowed to take the benefit of composition. So that person would be debarred from opting for composition. That is, a tax evader should not take the benefit of composition whenever he is caught in future. That is why maybe they would have used this word, a registered person. Now, interestingly, before the amendment, the word was that you are required to pay in lieu of tax payable by you an amount calculated at such rate. However, post amendment, they are using the word you are required to pay an amount of tax. Again, I raise this point that was this amendment necessary? My view is that they should have continued with the original word that you are required to pay in lieu of tax payable an amount. However, the amended position is they are saying amount of tax. So I raise another issue that now when they are specifically saying that now you are paying an amount of tax, then there would be some other implications. Like the first implication is, if this is an amount of tax, then as per section 33, are you supposed to indicate it in tax invoice? However, the rules of composition say otherwise. They say that you cannot charge it in your invoice, you cannot recover it from your buyer. So I believe this amendment where they use the word amount of tax, I think was not required. However, when we discussed on this particular point, certain inputs came that maybe they would have deliberately made this word as amount of tax instead of an amount, because or so that any other provisions of the law like recovery provisions which applies to recovery of tax, the composition dealer should also be covered. So I agree to that point that this is a valid justification of using the word amount of tax instead of an amount. However, this creates new challenge. Now, this is what we discussed last time and we ended our deliberation on. So there is a small case study where there is a mega store, Venu Mega Store, who has registered under composition dealer and who is selling goods at MRP. Now, because of this amendment, which says that you are required to pay an amount of tax instead of the tax payable under 9(1). Now, what implication it could have is that where a composition dealer is calculating its tax liability and it is selling goods at MRP, which we all know already includes the amount of tax. The question was whether he has to compute that 1% on the total gross sales turnover, which is at MRP, or it has to be done by doing back calculation. So everybody agreed, or major agreement was that it should be on the gross value and no need of doing any back calculation. However, I believe this amendment where they use the word deliberately amount of tax instead of an amount can have a very serious repercussions when we go to the second pointer in this. The second pointer is, the point that I have raised is that when you want to determine the turnover, so let us say in this year, if I want to determine my eligibility for composition, I have to check the turnover of the last year, whether it crosses 1.5 crore, whether it crosses 50 lakhs. Now, my second question is, then when I'm checking the turnover of the last year, at that time, if my sales are at MRP, like the same example, then when I'm determining the limit of 1.5 crores, I have to check the aggregate turnover of last year. In this particular case, my question was that whether now I will again do back calculation to find out the turnover excluding the GST or including the GST. Why this so? Because of two important pointers. One, if you see the definition of aggregate turnover, the definition of aggregate turnover says that the tax, central tax, state tax, etc. should be excluded. And when you see the definition of the term central tax, I'll just take that. See, so if you go to the definition of aggregate turnover says that it will exclude central tax, state tax, union territory tax, etc. And when you go to the definition of central tax, it says that central tax means the central GST, that is the CGST levied under Section 9. Now, what implication this has is, we just discussed over here that now the law is very clear that you are required to pay an amount in place of Section 9(1), the amount that is calculated at the rate. Now, aggregate turnover says you exclude central tax. Central tax is the tax which is levied under Section 9(1). Now, if I make a conjoint reading of these definitions, now what should be the tax implication of this? That whenever I am counting the previous year's turnover for determining my eligibility for composition, the question is whether I will include the GST amount or I should do back calculation. Over here, I remember Arup ji was of the view that, or what he is, I think, recommending and doing is, he is saying that we have to exclude that 1% and determine the turnover. But other people had a view that we will include that and we will determine the turnover. Now here, if you go by the definition of aggregate turnover, it says exclude central tax, state tax, and central tax definition says central tax is the tax which is levied under Section 9(1). Now here I have a question. When Section 10 says that you are required to pay an amount of tax in lieu of tax payable by you under Section 9(1). So my question is whether the tax levied under Section 10 is instead of 9(1), that is, it is replacing 9(1) completely, or it is a new tax in the place. Why I am saying so? Because if it is just replacing, that instead of paying under 9(1) or by the calculation under 9(1), you are simply calculating on a gross value under 10(1), but it is as good as the tax of 9(1) only, but calculated under 10(1). If that is the interpretation, then central tax will also include this particular 1% GST that you are levying. And once central tax includes this 1% GST, then while calculating aggregate turnover, you will exclude even this 1%. However, if my interpretation of this particular line is that 9(1) is a different tax, and when 10(1) says in lieu of tax payable under 9(1), it means 10(1) is creating a new charge, a new levy, accepting 9(1). If that is my interpretation, then whatever tax we are paying under composition at the rate of 1%, 5%, 6% is not a central tax levied under 9(1). And if it is not a central tax levied under 9(1), then the interpretation changes. Then aggregate turnover of the previous year should include the GST paid under composition scheme also. So I have two interpretations or two posers over here. One, when we are saying that Section 10(1), that is a composition tax, is a tax in lieu of tax payable under 9(1), one interpretation could be it is simply replacing 9(1), but it is still a tax of 9(1) only, but calculated under 10(1). If that is my interpretation, then central tax will include even the composition tax. And once it includes the composition tax, it has to be excluded while counting the turnover. That is the Arup ji's point of view. However, the second interpretation could be that 9(1) and 10(1) are two different charging sections. They are two different levy sections. So when 10(1) says it is in lieu of 9(1), it means it is a new levy other than 9(1). And if this is the interpretation, then the interpretation or the point of view of other members who said that we should include the composition tax also in the turnover of previous year, that would hold good. So according to me, this point has to be understood. If you ask my view on this, my view is that 10(1) is not a new levy. 10(1), if you read the language, it simply says that instead of paying the tax under 9(1), that is, instead of the tax payable under 9(1), not leviable under 9(1), it means, I believe, even for composition, the levy is under 9. However, the calculation and all the modalities are only shifted to 10. It means, I believe, my interpretation is what is of Orupji's interpretation, that composition tax remains to be a tax levied under 9(1), only computed in the manner, that is, only the tax payable amount is computed in the manner given under 10(1) or 10(2)(a), as the case may be. And hence, it is a part of central tax. Hence, it is excluded, or it has to be excluded while computing aggregate turnover of the previous year. So, this up to this point, we had discussed in the previous session.
Vishal, one basic doubt here. Sorry to interrupt.
No problem.
Here, yeah, see, one of the conditions for the composition is that we cannot collect the taxes, right? So can we say that even this MRP, which includes the tax component, can we say that it is still applicable for the composition taxpayer? For the MRP foods actually, because it is inclusive taxes. Yeah.
Yes, ma'am. I think we had a discussion on this even in the previous session. My view, I'll just share so that we can.
Conclusion, I was not able to remember, so I thought I'll just take up the view.
No, ma'am, there was no conclusion, fortunately or unfortunately, but I'll just share my understanding on this. See, whenever we say MRP is inclusive of all taxes, I interpret it like this. It means the tax, whatever is applicable. And if there is no tax which is applicable, then MRP, I interpret it as a whole value for the goods or service only, that is without any tax component included. This is the first point. So this is my first submission on your question. Now, adding to this particular point, now when you ask, then Vishal, what is your interpretation in this case of composition? So I come back to the point. That is why I've particularly taken the case of MRP composition dealer. My interpretation is in line with what Orupji said. And how I draw that interpretation, I've just explained that. According to me, the composition tax that we are paying under Section 10 is actually the tax which is originally levied under Section 9 itself. Only the Section 10 is providing a mechanism of payment and compliance. Hence, the composition tax that we compute under 10(1) or 10(2)(a) remains to be a tax levied under 9. And once it remains to be a tax levied under 9(1), then comes the point, how do you interpret the turnover point? I believe when we are counting the turnover of the previous year to determine the eligibility, we should exclude that particular tax. And again, what tax we have to exclude? Now, there are two scenarios. If you are registered as a composition dealer, then I believe, or my interpretation is, MRP includes the applicable taxes. This is what I just mentioned. An applicable tax is a tax at the rate of 1%. If you are registered as a regular dealer last year, then MRP again includes the applicable taxes. It would be the normal 5%, 12%, 18%, as the case may be. So it has to be excluded that way to determine the turnover of last year for the purpose of determining your eligibility in the current year for composition scheme.
Okay.
I hope, ma'am, I was able to make my point clear.
Okay, thank you.
Yeah. Anybody if has to just add something, we can just give 2 more minutes to this before we can proceed to the next point. No? Fine. Now, in this entire composition scheme, the most important consideration according to me is the concept of turnover. Now, there are two terminologies used. One is aggregate turnover and the other is turnover of state. Now, first I come to the concept of aggregate turnover. This aggregate turnover concept is used at different places in the entire GST law, and everywhere or wherever it is used, like in case of registration chapter, in case of your HSN applicability, or in case of your e-invoice applicability, in case of your 99C applicability, in all these places, wherever the term aggregate turnover is used, the aggregate turnover would mean what is given in Section 2, Clause E, where it says aggregate turnover means the value of taxable supplies, the value of exempt supplies, everything, and it has to be counted on PAN basis. And most important, it will exclude central tax, state tax, etc. And we just discussed central tax means the tax which is levied under Section 9. Now, this is the definition of aggregate turnover, which is applicable to the entire GST law for all purposes wherever aggregate turnover has to be checked. However, when you come to composition chapter, or when you come to this section 10, they have added certain pointers to determine the aggregate turnover for the purpose of determining eligibility of composition scheme. Now, we all know 10.1 composition scheme, the aggregate turnover eligibility is 1.5 crore, and for 10.2 eligibility is 50 lakhs. Now, for both these, the common definition of aggregate turnover, which is given under explanation 1, which is applicable to both these schemes, that is 10.1 also and 10.2A also, it says that for the purpose of determining this aggregate turnover, for determining your eligibility, the aggregate turnover will include value of supplies made between 1st April to the date when you become liable to pay tax. So let us say your initial 20 lakhs. Until unless you don't cross it, you are not liable for registration. Now, there was a confusion. This is more of a clarificatory explanation, the first part, which says that the first 20 lakhs has also to be counted for determining your eligibility of composition scheme, and it will be counted and included in aggregate turnover. This is understandable. And the most important part, it further says, however, the value of exempt supplies of services, and with service, the service by way of extending deposit loan advance, where your consideration is in the form of interest or discount. So in simple words, interest will not be included while computing aggregate turnover for determining your eligibility for composition scheme. Now here we have to delve deep into this, because there were amendments, there were different positions. Originally, when the GST law was made, this particular explanation was not there. That is, this particular explanation, as you can see, is introduced from 1st of Jan 2020. So on 1st of July 2017, we did not have this explanation for aggregate turnover. So aggregate turnover was meaning only the original explanation that is applicable to the entire GST law. And as per that original explanation, on 1st of July 2017, up till the first ROD, the first ROD which was issued in this regard was on 13th of October. So from 1st of July 2017 to 13th of October 2017, aggregate turnover included even interest. Now comes the date of 13th of October, where we had multiple clarifications. One was relating to 9.4 RCM. Similarly, we had another clarification in the form of this ROD, which said that, now it is interesting to note, the language says that what will not be included in aggregate turnover for the limited purpose of composition scheme eligibility is the value of supply of any exempt service, including loan deposit advance, where the consideration is interest. Now, if you read this particular point finally, you will realize that, this is at least my view, that there was a blunder while drafting this particular ROD, because they wanted to exclude only interest. But if you read the fine prints of the language, it gives a clear impression that what will be excluded is the value of supply of any exempt service, and it is including further the interest portion. So I interpreted like this, that from 13th of October 2017, from the date this ROD is applicable, not only interest, any exempt supply would be excluded from aggregate turnover only for the limited purpose of determining your eligibility for the composition scheme. Now comes the second ROD. This ROD was issued on 1st of February 2019 alongside the first amendment of the CGST Act. And this ROD is in supersession of the previous ROD. So we can say that the applicability of this ROD is from 13th of October 2017 up to 31st of Jan 2019. And from 1st of February 2019, the new ROD applies. Now, this new ROD clarifies that for the purpose of, again, for the limited purpose of determining eligibility for composition scheme, what will be excluded is the interest component only. So now from 1st of February 2019, what will be excluded from your aggregate turnover is only the interest component and not all exempt supplies. So this, I believe, is more like correcting the previous blunder which was there from the previous ROD. But however, again, that point also we just briefly touched in the previous session, that to what extent is the legal sanctity of these RODs. But if I am going strictly by the ROD, from 13th of October till 13th of October 2017, to 31st of Jan 2019, I will exclude all exempt supplies while determining my eligibility for composition. However, from 1st of Feb onwards, I will exclude only interest while determining my eligibility for the purpose of composition scheme. I hope this point is clear to all. Anybody has any questions, posers for this?
No, Vishal, I think it was wonderfully explained by you.
Fine, sir. Now we come to the second type of turnover that is again of great importance. That is turnover in state. Now, when we come to the definition of turnover of a particular state, again, we have one definition which is generic, which is applicable to the entire GST law given in section 2, clause 112. And the second definition is again under the composition scheme by making certain changes to the original definition. Now, what is the original definition of turnover in a state? It simply means, or I will say it is simply copy paste of the definition of aggregate turnover. Aggregate turnover is on pan-India basis. Turnover in a state is a turnover of that particular state. Why there are two definitions? My understanding is aggregate turnover concept is there to determine your eligibility for different things like registration, like composition, like e-invoicing, etc. Whereas turnover in a state definition is there because whenever you are computing your tax liability for any tax period, we compute tax liability state-wise. So we have to check the turnover of a particular state so that we could compute our tax liability for that particular state and discharge it in that particular tax period by way of our returns. Now, the definition of turnover in state is copy paste of the definition of aggregate turnover with only one change. Aggregate turnover definition includes all these taxable, exempt, everything, but it is on pan-India basis, whereas turnover in a state again includes everything, taxable, exempt, everything, similar to the definition of aggregate turnover, but only the difference is it will cover these supplies or turnovers which are of a particular state. Now, to this extent, we have understood the similarity and difference between aggregate turnover and turnover in state. However, when we come to composition, now composition again has made certain changes to the definition of turnover in state. Now here we have to be cautious because we have two different composition schemes. One is under 10.1. Let us for simplicity call it as composition for goods. And the other is under 10.2a. Let us for simplicity call it as turnover for services, but it is including both service and goods. Now, when you come to this part, here there is a slight distinction when we are seeing turnover in a state vis-a-vis section 10.1 and section 10.2a. Why there is a difference? Let us first understand this. The reason is originally under 10.1, that is composition for goods, there was no provision for allowing you to provide any service. Then from 1st of Feb 2019, that is from the first GST amendment, we found some amendment in the concept of 10.1 whereby they said that we will allow you to provide services up to some limit, and the limit, as we all know, fixed was up to 10% of turnover. Now, which turnover? This is where we have to interpret and understand. It says 10% of turnover in state or 5 lakhs, whichever is higher. So this particular point was added in section 10.1 only. So it is not related to 10.2a because 10.2a anyways allows you to provide services. Secondly, this particular point is not replicated in 10.2a in the other way. That is, over there, they will put a similar limit for supply of goods. That has not happened. So 10.2a allows you to provide supply goods or service in any proportion. However, 10.1, which is originally designed for supply of goods and only one service purely, that is restaurant catering. So for the supplier of goods in the form of traders or manufacturers, from 1st of April 2019, this second proviso, which is limited only to section 10.1, says they can now provide even services to the extent of 10% of turnover in a state. Again, which turnover of a state you have to check? You have to check the turnover of state of the preceding year. Now, I'll request all the participants to just be more on the details because I have crafted some issues and case studies relating to this, which I'm sure either somebody may have faced or in future you will come across these questions. So, moving further, this particular point again had an amendment in the form of explanation to section 10.1, we said that for the purpose of this second proviso, that is for the purpose of this part, which allows you to provide services up to 10%, it is further said that the value of EXIM supply in the form of extending loan deposits, where consideration is represented by interest, it shall not be taken into account for determining the value of turnover in a state or union territory. That is, now this is interesting. In the previous slide, we saw that interest is not included in your aggregate turnover for determining that 1.5 CR or 50 lakhs limit. Now here, this explanation 10.1 says, similarly, interest will not be included while computing this particular limit of providing services. So here again, interest will not be included in this turnover as well. Which turnover now? Turnover of a state to determine the 10% limit. So interest is now excluded from aggregate turnover also. Interest is now excluded from the turnover of state also. For what purpose? For the purpose of determining the eligibility that you can supply 10% of service. But while determining this eligibility, interest will be excluded. Now here again, there is a proviso. This proviso is saying that whenever you are checking this turnover of 1.5 CR or 50 lakhs, we all know that it has to be checked on pan-India basis. So basically the difference which I'm trying to bring about over here is, because my next slide case studies are very directly connected with this, that turnover of state, when they are using this terminology, it is limited to turnover of one particular state. But when we see aggregate turnover, they say aggregate turnover is on pan-India basis. And this particular proviso, which is there in 10.1 also and 10.2 also, that is for both the schemes, the proviso says that if you are opting for composition in one state, you have to compulsorily opt for composition in the other states. Now, with this background, let me take you to the issue which I want to bring about. Now, what is my issue number 3? If in previous year, service turnover exceeded 10%, but aggregate turnover was below 150 lakhs, can composition be availed in the current year? Now, this question is directed directly with the second proviso. So if somebody wants an example, I'll give you an example. Let us say last year, my turnover in my particular state was 50 lakhs for goods, 50 lakhs for services. I was registered as a normal dealer because I was not eligible for 10.1 because my service turnover exceeded 10%. So I better got myself registered under regular dealer. Last year, I worked as a regular dealer and my turnover breakup is 50 lakhs for goods, 50 lakhs for services. So aggregate turnover is 100 lakhs. Now in this second year, that is in the current year, I wish to opt for composition scheme. Now composition scheme, I wish to opt under 10.1 because in current year, I'm expecting that my service turnover will go down. In current year, it would be within 10% limit. However, in my present example, last year turnover was 50-50, where my service turnover was 50% of my aggregate turnover. So my poser over here is reading all these things, whether the dealer would be eligible to avail composition scheme in the current year, if in the last year, my service turnover was more than 10%. Any inputs on this?
I think preceding year is taking care of that. No? Preceding year is there. So 10% in the preceding year. So it was exceeding more than 10%.
So
I
you
think
mean
they're
to say I'm not eligible?
Yes.
Okay. Anybody else would like to add something to this? My belief is I'm eligible. My belief is I'm eligible. Soni ji is saying eligible. Soni ji, can you just justify why you believe it is eligible?
Hello, Vishal.
Yeah, hi.
I think what is mentioned in the criteria is that 10% of the state turnover of the previous year. Okay. So it doesn't say that keep in the previous year also it should comply with the 10% of the preceding previous years.
Okay.
So only we need to see that, for example, in financial year 23-24, we need to see that in 22-23 whether we comply with the state turnover limit of 10% for the current year of 23-24. That's all.
Exactly. My interpretation is the same. So, ma'am, this is what is my understanding as well.
No, your fact was last year it was 50 lakhs services, 50 lakhs goods, right?
Correct.
And this year, you are expecting that it might go below. So,
Yeah, and I'll keep it below 10%. So whether I'm
okay.
eligible for 10-1, because anyways 10-2A I'm not eligible because it is crossing 50 lakhs last year.
Okay, so value should not exceed. So you are considering only value for that. Okay, value should not exceed. So 10% of 50 lakh. So that way you're calculating.
No, 10% of 100 lakhs, because my last year's turnover is 100 lakhs.
Ah,
So last year's total turnover is because we are anyways taking aggregate turnover of the state. So my aggregate turnover of the state of last year is 100 lakhs.
okay.
10% of this will come to 10 lakhs.
Hmm.
In the current year, I'm expecting that whatever is my total turnover, in that service component will be below this 10%. Assuming, let us say again, current year my turnover is 100 lakhs, but my service component, I'll keep it below 10%, that is below 10 lakhs. So my question is, last year it was 50-50. So last year I exceeded the 10% criteria. Still, am I eligible to avail for 10-1
Okay, so
composition option in the current year? My understanding is yes, same like Sonyji's, because my understanding is this requirement that you should not provide service beyond 10% of turnover of state. This 10% is applicable for current year, that in the current year, I should not provide service exceeding 10% of the turnover of previous year. So I'm taking turnover of previous year, but my interpretation of this particular proviso, second proviso, is that the limit of 10% of services for the current year. So in current year, my turnover of service should not exceed 10% of the preceding year's turnover. This is my interpretation.
Vishalji, can you explain once more? I have yet to catch up with you. 10-2 prevents you, right? How can you even enter into the question of 10-1? Once you cross 50 lakhs, how are you entitled to 10-1 itself and going into the proviso when 50 lakhs bar, it's already there in 10-2?
The 10-2A, the 50 lakhs bar is there, na, sir?
So in 10-2, there is a 50 lakhs bar. You have already crossed 50 you have crossed 50 plus 50 and you are at 1 crore. So anyway, you are not entitled for 10-1. So why is the question of 10% being involved here?
Sir, I am eligible
Correct
for
me if I'm
10-1.
wrong.
For 10-1, my limit is 1.5 crores. Na?
But for that, the services limit should be only 5 lakhs, right?
So that is the question, sir, whether this limit is for the previous year or this limit is for the current year. This is where my question comes. That is the main poser which I am posing. That when this proviso says that your service turnover should not exceed 10%, whether it should not have exceeded in the previous year or it should not exceed in the current year in which I want to opt for composition. That is my basic question, sir. I hope, sir, I've made my question clear.
Yeah, and I got the question.
Yeah. So what is your view, sir?
I was also under the impression that it is not eligible.
Nee, so now what is your view, sir?
No, I had to form an opinion. Let me go through it.
Fine. Sorry. I thought you formed the opinion. I'm just sharing my understanding. Maybe y'all can put later on your views on the group whenever y'all figure it out, because these are the posers which I found are relevant. It may come up today or tomorrow with anybody of us. So my understanding is this particular proviso, the second proviso, is putting limit of 10% of service in the current year when I want to opt for composition. Only for deciding this 10%, I'm taking the turnover of preceding year. So preceding year, my total turnover is 100 lakhs in my example, which is 50-50. Still, in the current year, I should be eligible for 10-1 if I keep my current year service turnover below 10% of that limit. This is my interpretation. Should I proceed? Maybe you all can keep this as a point for further deliberation, and maybe we can
I think that is, I think that would be good.
Yeah. Now, again, the second issue, or rather, firstly, the poser, which I just explained in the previous slide also. Now, a difference is aggregate turnover is PAN-based turnover, whereas turnover in a state is qua a particular state. This is what we just discussed. Now, here, my issue or question is, if this is clear, then I'm again making a case study. So let us say Mr. Vishal runs a grocery store in Nasik. My turnover of the previous year is 100 lakhs purely from this grocery store. That is only from supply of goods. And hence, last year, I was paying tax under 10-1. I was eligible also, and I registered myself under 10-1 and paid tax under 10-1. Now, I decide to set up a coaching class, which is provision of service in Bangalore for CA students from the current year. That is from 23-24. So last year, I was only exclusively in supply of goods in Maharashtra. This year, that will anyways continue. I want to get into provision of service also, which I wish to start in another state, that is state of Karnataka. So in Bangalore, I wish to set up my coaching center from where I would be providing services. Now, the question is again relating to this pointer. Now I expect that my turnover in the current year would be 10 lakhs, that is within the 10% requirement. Whereas my grocery turnover would be 130. So my aggregate turnover will be 150, below 150 in the current year also, where I'm expecting grocery will reach 130 and the service turnover from my Bangalore would be 10 lakhs. Now my question is, can I apply for registration in Bangalore under 10-2A and in Nashik under 10-1? That is, can I opt for both these composition schemes for different states? In one state, I am under 10-1. In other state, I apply under 10-2A. Is it possible? I'll just take you to previous slide. Maybe that will help you get the answer. Proviso under 10-1 says, provided that where more than one registered persons are having same PAN issued under income tax, the registered person shall not be eligible to opt for scheme under subsection 1 unless all such registered persons opt to pay tax under that subsection. Similar proviso is under 10-2A also, provided that where more than one registered person are having same PAN number issued under income tax, the registered person shall not be eligible to opt for scheme under this subsection unless all registered persons opt to pay tax under this subsection. So both these schemes 10-1 and 10-2A have the same proviso. So now my question is, under the same PAN, I'm extending my business. I'm starting a new vertical in Bangalore. So over there, since I'm going to provide only service, can I take 10-2A? And in Maharashtra, I will continue with 10-1. Is this possible?
I think it is using under this subsection. So I think 10-2A should. So they cannot, no? They have to be
Yeah.
either under 10-1 or 10-2A.
Okay.
Like any provision, I'm going with, I have to go blanket for both,
Okay.
either 10-1 or 10-2.
Okay. So I'm not allowed to selectively take 10-1 in one state and 10-2 in other state, right?
Right.
Again, I too am of the same view. Now here again, I have an interesting question. Now it says that my 10% of turnover of state, the maximum service which I can provide is up to 10% of turnover of state, and that turnover is of the preceding year. Now, interestingly, in my example, my preceding year's turnover in Karnataka state is 0. I repeat, as per this particular point, how much service I can provide service up to 10% of turnover of the state, and the turnover I have to take is of the preceding financial year. Only to that extent I can provide service if I wish to continue under 10-1. So one thing we just concluded, that for Nashik and for Bangalore, I cannot have two different composition schemes. I have to have blanket, and the blanket would obviously be 10-1 because I have exceeded 50 lakhs. Now, if I'm going for 10-1, I still have an issue. Can I go for 10-1 in Bangalore, from where I'm going to provide service? Why is my issue? Because the restriction put in the second proviso is that I can provide maximum service up to 10% of turnover of the state, and the turnover of the state has to be taken off the preceding year. Now, the turnover of the state, I believe, means the state in which I'm going to provide service. Here, I'm going to provide service from the state of Karnataka. In Bangalore, when I'm taking registration, I have to see the turnover of the state, which means turnover of Karnataka, Bangalore. And in Bangalore, my preceding year turnover is 0. Now my question is, can I still be eligible to go for composition under 10-1 in Bangalore? And if it is not in Bangalore, then by default, it will not be even in Maharashtra. Yes, any inputs from the group? If you ask me, when I was studying this and when I crafted this particular point, I crafted it with this understanding only that in this scenario, I will not be eligible for composition in Bangalore. And if I'm not eligible for composition in Bangalore, by default, my composition for Maharashtra will also go and I'll have to take normal registration. Though this does not appear to be the intention of the lawmaker, because if I consider my aggregate turnover, then 10% is fitting in the aggregate turnover. But here the second proviso says that 10% has to be seen of turnover on the basis of turnover of a state. And again, I believe the state means the particular state where I'm rendering the service. Any inputs? I think I should then proceed. My view is, though this is not the intention of the lawmaker, but I believe going by the strict interpretation of the language of second proviso, I will not be eligible for composition scheme in Bangalore. And if I'm not eligible for composition scheme in Bangalore, I will also have to take regular registration in Maharashtra. Again, maybe this can be another question kept open. Let us proceed. Now, again, we come to the same point, or we are still on the same point, that is the definition of turnover of state. Now, we were discussing the definition of turnover of state in the previous slide from the perspective of checking eligibility for composition scheme. Now, turnover of a state has another purpose in composition, that is for computing your tax payable. Because the rates of tax, that is 1%, 5%, 6%, are to be computed on turnover of the state. So now we are looking at turnover of state again, but with the perspective of computing your tax under the composition scheme. Again, one, you have the generic definition, which is applicable for the entire GST law. And the second is, which is applicable limited only for the composition scheme. Now here, you have explanation 2, which is generic to both the composition scheme. So it is applicable to 10.1 also and 10.2 also. What does this explanation 2 says? For the purpose of determining tax payable by a person under this section, that is the composition scheme, both 1 also and 2 also, 2A also, the expression turnover in a state shall not include following supplies. So first is supply from the first day of April till you become liable for registration. And second, most important, interest. So you'll find that this interest has got a very special place in this entire composition scheme. First, it is not included in aggregate turnover. Second, it is not included in turnover of state. In both these cases, it is not included for determining your eligibility for composition. Now, third, it is again not included in turnover of state, but now it is not included in turnover of state for the purpose of computing the composition tax paid. So let us say your turnover in a state is 100 lakhs for goods and 5 lakhs for interest. Interest will not be counted while determining your 1.5 lakh limit. Interest will not be counted while determining your 10% service eligibility limit. And also, when you are computing your tax payable, you will compute your tax payable only on 100 lakhs and not 105 lakhs. So I'll just change the example to make this more interesting. Let us say my turnover in state from supply of goods, I am a grocery person, is 100 lakhs and I am earning interest of rupees 20 lakhs. Now, in this particular case, when I'm earning interest of rupees 20 lakhs, which is exceeding the 10% limit, the question is whether I am eligible for composition scheme. Firstly, in computing the aggregate turnover of 1.5 crores, I will not count this 20 lakhs. So for the purpose of composition eligibility, my turnover remains 100 lakhs. Second, for the purpose of composition eligibility of supplying 10% of service, this 20 lakhs will not be considered. So again, I can supply service up to 10% of turnover. Again, the turnover is 100 lakhs, not 1.2. 100 lakhs, 10% is 10 lakhs. even though my interest is 20 lakhs, still I am eligible for composition scheme because interest is not considered even for determining my eligibility for composition scheme up to the 10% of service. So even though interest is a service, it is not considered for determining my eligibility. This is the second case. So even though I'm exceeding 10% of turnover while providing interest service, that 20 lakhs entirely is not counted. So I'm still eligible for composition scheme. And third, when I'm computing my tax payable, it will be 100 lakhs into 1%. So again, here interest is not considered. So this is some input on this. Now, we all know these are the rates. The rates are under section 10(1). If you are a manufacturer, you have to pay 1% on the turnover of state. If you are a person who is engaged in restaurant catering service, you have to pay 5% on turnover of state. If you are other than these two, so let us say if you are a trader, you have to pay 1% of turnover of taxable supplies in the state. So this is interesting. For all other composition dealers, you have to compute that 1%, 5%, 6% on your aggregate turnover, which even includes exempt supplies, but excludes interest. It includes all exempt supplies, only it excludes interest, as we discussed in the previous slides, but only for the purpose of a trader who is a composition dealer. When he is computing his tax liability, you will exclude all exempt supplies. You will count that 1%, you'll calculate that 1% on only taxable supplies. And for the 10(2)A registered dealers, that is, let us say for the service composition dealers, the turnover of state will be multiplied by 6% for determining their tax payable. So this is about the tax calculation. Now I'm interested in something else. Now another interesting case study, interesting poser that comes out of from all these conditions. So Mr. Aurup Das is running a legal consultancy firm in Kolkata since May 2020. Since his entire outward supplies under RCM, he did not apply for registration. As we all know, Section 23 exempts. So he is not registered irrespective of whatever is his turnover. Now in 23-24, that is in the current year, he wishes to start a health supplement store whereby he is going to supply goods. So it may be protein powder, etc. So he is going to set up a store for supplying health supplements in Delhi. So now he wants to enter into supply of goods in Delhi. His turnover from his consultancy practice of the last year is rupees 40 lakhs. Up to last year, that is 22-23, he is not registered because he's only into supply of services which are fully covered under RCM. So he has not taken any registration. Now, in this year, he wishes to start his, he wishes to extend his business by starting a health supplement supply store. Now, my questions. Should he apply for registration in Delhi once he makes any outward supply? Second, if he wishes to opt for composition, whether he will be eligible under 10(1) or 10(2)A. And third, if he opts for composition, will he also be required to register in Kolkata? And if yes, will he be required to pay tax even on his RCM supplies? So there is a question. Person is registered under service composition, sponsorship service. Sir, so I think your question will be answered here because I have raised a similar question. So group, I'm putting this poser to you. So we are taking a case where the person is providing outward supply of service of legal consultancy, which is fully under RCM. So the person has not taken any registration. In the current year, he wants to start supplying goods. My question is whether he should apply for registration in Delhi. Why is this question? Because if he is till date supplying only RCM outward services, he was not required to do any registration. Now he wishes to make a forward supply that is of goods. So whether the first question, what will be your answer? Whether he will have to apply for registration in Delhi once he is making any outward supply from Delhi. One answer I am getting on the group is yes. Pawan Bhai is saying yes. Yes, others in the group, in the meeting. If he's making outward supply of the goods from his Delhi business place, will he be required to register under Delhi? Simple. We have to check turnover of the last year. Now, last year's turnover is 40 lakhs, which is of outward RCM supplies. This is the main question. If you are making an outward supply which is covered under RCM, whether it is counted as turnover, whether it will be included in aggregate turnover. Yes. Whether outward supplies which are covered under RCM are included in aggregate turnover. The answer is yes. And since they are covered in aggregate turnover definition, so my turnover is already exceeding 20 lakhs because my last year's turnover is 40 lakhs. But since it was fully under RCM, I was not registered. Now in this year, even if I make a ₹1 outward supply from Delhi business place, I will be getting covered in the requirement of getting registered. So yes, the answer for first part, I'm sure undoubtedly will be yes, that yes, I am required to apply for registration in Delhi once I make an outward supply. Now, interesting question. If I am required to take registration under Delhi and I wish to opt for composition, it would be which composition? Am I eligible under 10(1) or I have to apply under 10(2)(a)? Which composition I would be going for? (10(1) or 10(2)(a)? Obviously, anybody would prefer 10(1) because the rate is lower in 10(1) as compared to 10(2)(a). And 10(2)(a) says that who is not eligible under 10(1) can only come to 10(2)(a). So anyways, you have to first check eligibility for 10(1). Again, the same issue. The issue is we have to see for 10(1). Okay. Sony ji is saying 10(1). Now, what is the issue in 10(1)? I'll tell you why this question comes whether 10(1) or 10(2)(a). Because my major outward supply, or rather my entire outward supply last year is of service. If I want to come under 10(1), I can supply service only up to 10% of my turnover. Now here again the same issue which was there in the previous slide. The issue is that in Delhi state, I did not have any turnover of service. Whatever turnover of service I'm having is in some other state. Now, if I'm having turnover of service in some other state and I am starting supply of goods in another state, how to compute that 10%? We already saw 10% is to be taken off a particular state. Now, the only question is, in Delhi state, my 10% is not exceeding because I did not have any supply last year in Delhi. But if I check my turnover of another state, that is Kolkata, West Bengal, then my turnover was 100% service turnover. So the question is, when I'm applying the 10% limit to determine my eligibility for composition under 10(1), how will I take that 10%? We already saw it is 10% of turnover of state. But the question is, I want to operate in Delhi. This turnover is of West Bengal, whether it is going to impact me or whether still I can go for 10(1). Yes. If I apply whatever is my understanding of this whole composition scheme, the 10%, as I mentioned in the previous case study also, is turnover of a particular state. When I'm talking about Delhi state, from the point of view of Delhi state, I'm not having any turnover of service either in the previous year and may not be even in the current year. So as far as Delhi state is concerned, my 10% is not getting triggered in Delhi state at least. But now again, when we check the proviso, it said that if I opt for composition under 10.1 in one particular state, it has to be in under all states. And if I do not, if I apply for a composition under the second option, it has to be under the second option in all the states. Now, even though individually in Delhi, I may be eligible for 10.1, whether I am individually eligible for 10.1 in the state of Kolkata, obviously the answer would be no. So even if I wish to apply for 10.1 under Delhi, which I may be eligible for because there is no service turnover in Delhi, but on a holistic view, when I look at all the provisions, including the proviso, which said that I should apply for the same composition in all the states wherever I'm taking registration, 10.1 will not be possible in Bengal. Now comes the next question relating to this. Let us say in Delhi, I'm eligible for 10.1, but from Bengal point of view, I'm not eligible for 10.1. I'm yes eligible for 10.2A. But from Bengal, my entire outward supply is under RCM. So now the question linked to this question is, if I decide to take registration under Delhi, whether I'm also required to take registration under or in Bengal. I think if we get answer to this first, then answering whether 10.1 or 10.2A would be much easier, because I have to take the same composition in all the states. So my first question before we conclude this question is, in this scenario, when I'm taking registration in Delhi, am I also required to take registration in Bengal, from where my entire outward supply will always be under RCM? Am I required to take registration even in Bengal?
I think not required, but subject to checking the provisions of section 23, what it says.
23 is saying that where your entire outward supply is under RCM, you are exempted from registration. This is what 23 says in very simple words.
In Kolkata, my entire supply is under RCM, no?
Correct.
So I don't think registration is required for that in Kolkata, even though I'm taking registration in 10.1 at Delhi.
Okay. I too believe the same. I too believe the same. So let us say, for the time being, we are going step by step. So let us say for the time being, we conclude this, that I am not required to take registration in Kolkata because of 23. So I'm only applying for registration in Delhi. Now, in Delhi, when I'm applying for registration, now coming back to this question, I wish to opt for composition, which I'm eligible because my turnover is below 50 lakhs also and below 100 lakhs, 1.5 crores also. In Delhi, am I eligible to apply under 10.1 or 10.2A? Why I'm saying this? Because again, the proviso which we read 2 slides before says that if you apply for composition scheme in one state, you'll have to apply in all the states. Now again, I'm not going to take registration, or I'm not required to take registration in Bengal. But reading that proviso which says that if you are taking composition in one state, you'll have to take composition in all other states, whether that proviso will hit my decision, and because of this proviso, whether I will be required to take registration in Bengal compulsory.
I think that proviso is for registration under 10.1 or 10.2A. We have to go similarly or blanketly across all the states, and that is not
This is
overriding. Yeah, that is not overriding the provisions of section 23, where it says that when entire turnover is under RCM, then no need for registration.
So what you conclude, sir? So it means I can go for composition in Delhi, first point.
Yes.
Second, I need not take registration in Bengal. And in Delhi, I can take composition and also not take registration in Bengal. This is your conclusion?
Yes, yes, yes.
Yes. And any counter views on this? Any counter views on this? I'll just read this proviso again for the benefit of all. Provided that where more than one registered persons are having same PAN. So this proviso requires that you are a registered person. That means you are a person who has taken registration. Second, it says the registered person shall not be eligible to opt for a scheme other than 10(1) if he is opting in one state. So if I read this particular proviso again, what impression it gives is that if I am taking registration in Bengal, then only I am covered in this proviso. And as what rightly said by you, sir, I am not required to take registration in Bengal. That is the first conclusion because of section 23. And reading 23 with this proviso, I believe is no contradiction, because this proviso would apply only when I'm taking registration or I'm already registered in a particular state. If I'm not liable to register in a particular state, I don't think, my interpretation is that this proviso will affect us. So moving ahead, concluding this particular point, that in this particular case where I am now taking registration under Delhi, first conclusion, I am still not required to take registration under Bengal. Second conclusion, even if I opt for composition under Delhi, I am still not required to take registration and opt for composition in Bengal. This is what is my view. And then maybe this question becomes easy. If he opts for composition, that is in Delhi, I have opted for composition, will he also be required to register in Kolkata? My belief is no. And if by chance anybody believes yes, Vishal, he is still required to register in Kolkata because of that proviso, then my next question is, if you believe yes, that yes, you are required to register in Kolkata, will you be required to pay composition tax on the supply of legal service as well? So I just modify this question. Let us say I am starting one branch of this outward supply of goods in Bengal also. So Delhi I have started. Now I am starting one branch in Kolkata also. Now if I am starting one branch in Kolkata, definitely now I have to take registration in Kolkata. Now if I am taking registration in Kolkata, the same question comes. One, whether I can opt for composition in Kolkata. Two, if your answer is yes, Vishal, you can opt for composition, then what will happen of my supplies of legal services which are under RCA? I hope my question is clear. So I've slightly modified the question for this part, that I wish to start one branch even in Kolkata of this supply of goods. And when I start this branch in Kolkata, the question is now whether I'm still required to register in Kolkata. I believe yes now. But then the question comes, can I opt for composition in Kolkata? And if your answer is yes, I can opt for composition in Kolkata, then whether I will also have to pay composition tax on the supply of the outward legal services.
I think that 10% limit would hit me in Kolkata.
Exactly. Now this is where the limit will play a role. And here, maybe because of this, now I'll just share my answer. I don't know how much time I'm left with. So if I have to answer this, my answer is, if in this question I have the modified question, I will not be eligible to take 10(1) registration in Kolkata because my supply turnover in Kolkata is exceeding 10%. Rather, the entire supply is supply of service only. So from Kolkata point of view, 10(1) is not eligible. Yes, definitely 10(2)A will be eligible, assuming the entire turnover of the PAN level turnover is below 50 lakhs, which let us see, we are assuming it is below 50 lakhs. So I'm eligible for registration in Kolkata under 10(2)A. This is what I believe. And then coming to the third part, then in this case, if I take registration under 10(2)A, both in Delhi and Kolkata now, whether I will be required to pay tax even on my outward supply of legal services. Here, I have an opinion, I'm not very sure, but as per my interpretation, I will be required to pay tax even on my outward supply of legal services. Because once I'm falling in 10(2)A, it is not using the word taxable supplies. Had I been under 10(1), maybe would have had a different discussion. Anyways, outward legal supply is not exempt for me, but it is the liability is switched on the other person. Now, if I'm registering under 10(2)A, where I have to pay tax at the rate of 6% on the turnover of supplies of the state, it is saying turnover of all supplies, which will by default also include this outward supply. Now, this is where I'm also not very sure, but as on date, my understanding is one, I can apply for composition under Kolkata, but that will now be under 10(2)(a, subject to the overall limit of 50 lakhs, but not 10(1). Secondly, if I apply under 10(2)(a in Kolkata, as on date, I believe I will have to even pay 6% on my outward supply of legal services.
Broadly, I agree with you, Vishal. But since in this case there would be a double taxation,
Yeah, that
because
is why I'm saying I'm
recipient is
also
still
not very
liable for a
confident.
tax. Sorry?
This is why I'm saying I'm also not very confident on this answer.
No, I also agree, because I also having the double dilemma on the whether it will be having a double taxation, because if you see the exempt supplies, you have to pay the tax. So
Anyways, but this is
even if
not
it is-
exempt supply, sir. Sir, outward
No,
RCM is
I'm
not
just
exempt.
trying to compare. If the intention is double taxation, if you want to deviate, so the department might say, see, even exempt supplies composition dealer is liable to pay tax. So here you are liable to pay tax under your forward charge at the 6%, and under the recipient is also still liable to pay the taxes.
That is the challenge, sir. Okay. So let us proceed. So this is my view on this. Again, we have various composition provisions. The eligibility, ineligibility, we all know what is allowed for a composition and what is not allowed. Here I have one more question to understand these eligibility and ineligibility pointers. So Mr. Arpit, a chartered accountant, is having turnover in the previous financial year of rupees 40 lakhs. He is from Rajasthan. And since it is below 50 lakhs, he has opted for composition scheme. Now, during the current financial year, he is continuing with the composition scheme because his last year's turnover is below 50 lakhs. His turnover up to May has reached 15 lakhs, on which he has discharged composition tax of 6%. Now, he makes a outward sale, that is, he's selling his old flat and he's shifting to a new, bigger flat. And this sale is of rupees 30 lakhs. Now, the first question, is he still eligible for composition scheme? Because 40 lakhs plus 30 lakhs will make it 70 lakhs. Sorry, not 40 and 30. Current year turnover 15 and 30 will make it 45 lakhs. Let us say this exceeds 50 lakhs. Will he still be eligible for composition scheme? And also, why this question comes, because one of the ineligibility conditions is that he is not engaged in making any supply of goods or services which are not leviable to tax under the Act. So these are the two reasons why I'm asking whether he is still eligible, because when he's saying selling flat, which is covered in Schedule 3, he's not required to pay any tax on that. Is he still eligible for composition scheme? And if your answer is yes, then the next question will come, that will he be now required to pay tax of the sale value of flat under the composition scheme? So two questions. Is he still eligible? Yes.
I think selling a flat is not a supply at all. It's not in the course of furtherance of business.
Agreed, sir. So that is why my first question, is he still eligible?
Yes.
Yes.
My view is same. And since my view is same, that is, it is yes, that is why I've made the second question, that if I believe that he is still eligible, which I strongly believe he is eligible. Now, my second question, will he be required to pay 6% on the sale value of flat? Uniji, you're not audible. Yes. Is he liable to pay 6% on the sale value of flat? My understanding is no. The reason is, again, I go back to the definition of turnover in state, because you have to compute this 1%, 5%, 6% on the turnover of state. And the definition of turnover of states that it is again the aggregate value of all types of supplies, whether taxable or exempt. So it has to be a supply first to be part of turnover. And since this is a schedule 3 item, it is not a supply in the first place. It will not form part of turnover, whether aggregate turnover or whether turnover of a state. Hence, I believe that one, he is eligible, he will continue to be eligible for this particular scheme. And second, he is not required to pay the 6% on the sale value of flat. Yes, any counters on this? Next case study. Mr. Unni Krishnan, an architect, has turnover in the last financial year of rupees 30 lakhs, which included interstate supplies. So from his Kerala state, he was also making outward supply to Maharashtra. Will he be eligible for composition scheme in the current year if in the current year is not going to make any interstate supply? Why this question comes? Because again, one of the ineligibility condition is that he should not be engaged in making any interstate supply, outward supply of goods or services. So last year he was making interstate supply, so he did not opt for composition last year. This year he does not wish to make any interstate supply, but his last year turnover includes interstate supply. Will he be eligible to opt for composition in the current year?
So last year he violated the condition, but it is not necessary for this year that he will violate that condition, or that this condition is for the current.
That is my
not
main
for the
point.
last year.
Is this condition for current year, or it is also for previous year for deciding the eligibility? Yes, Virendraji.
To me, it is for current year.
Okay. Yes, any other views on this? I too believe that these conditions, the eligibility and eligibility conditions given over here, they are exclusively for current year. Reason being, when we see the eligibility of last year, we have to see the aggregate turnover of last year or turnover in a state of last year. So wherever eligibility comes, they are specifically using the word turnover of last year. Now, aggregate turnover of last year or turnover in state of last year, both these definitions we already saw in earlier slides, will include taxable and exempt, within state, interstate, export, all types of supplies. So when you are checking the eligibility by taking turnover of last year, all these conditions do not matter, because these all ineligibility pointers, that you should not be engaged in making a non-GST supply, you should not be engaged in making interstate supply, all these are applicable for current year. Because last year's turnover may include anything, it may even include exports, it may even include exempt, still that will be not affecting your eligibility. So when you are checking the last year's turnover for eligibility, all these sales are allowed. This is my interpretation. So even if you have made all these sales in the last year, so far as your turnover is within the limit, this year you are still eligible to apply for composition scheme, provided in this year you do not make any of these outward supplies. So this is all from my side. Besides this, I have just completed this presentation by including all the other conditions and pointers, but there is no posers or case studies relating to that. So maybe if Umiji says, we can come to the last part, that is taking the question and answers, if any, besides whatever we have discussed. Yes, Unniji, any specific posers or questions from your side or from any members?
I would just like to have more information on the double levy concept that we have discussed earlier. That is, if I am in composition and I provide a supply that is covered under RCM, say manpower supply, or no, I mean security services, is the recipient liable for 9(3) as well as me under 10(2)(a)?
That is the point of that we had, that is our main one of the case studies, sir. What is your view on that, sir?
Section 10, as per you, I'm just opening up a dialogue. Is it a levy provision, or is the levy still in 9 and 10 only provides a manner of computation?
My view is the second one. I already discussed when we are discussing.
Yeah. So if that's the case, once the levy is already on the transaction and the manner is specified, won't the 9(3) provision become OTOs and it will be still covered only under 10?
Sir, this is the question which I'm also still figuring out, because when I answered this question, I also said that I'm not confident about this answer, but my interpretation says that for the time being, yes, double taxation is happening.
And even though it is in the
Unfortunately.
context of the composition dealers liability under 9.3, 10.1 is again, and 10.1 as well as the provisions of composition are all subject to 9.3 and 9.4. So can we adopt sections that subject to 9.3 and 9.4 also for the purpose of arriving at the forward charge liability?
So that is the question only left. That is the only way how you can protect yourself if you have to contest this. This is my view. I also thought on this, that only way if you want to get out of this double levy is that you can say that 9.1 is only overridden by 10.1. So 9.3, 9.4, like how as a composition dealer I have to pay on my inward. So 9.3, 9.4 should also be checked on my outward also, that where my outward is covered under 9.3, 9.4 for some other person, 10.1 should not apply. This is, I think, the only way how I will be defending the case if I have to. Otherwise,
so we can adopt subject to 9.3 and 9.4 for both inward as well as outward supply.
Then that, but sir, again, if I go by the literal interpretation, I'm not getting that literal interpretation. This is a homogeneous interpretation for this.
And again, if you say 10.1 prescribes the method of composition, method of payment, and the levy is already in 9, and once that same transaction is covered and hit by 9.1 when it is provided by a composition person, should the person who is at the recipient and pay at 6% or at the normal scheduled rate?
So it means then in that case, composition will only pay, then the recipient will not pay, right?
No. The recipient will pay at 6%. Can we take that stance?
Sir, I think that will be too bold a stance. My belief, because never 1%, 5%, 6% applies on the inward side, sir. It always applies only on the outward side. Because of that
I
amendment
agree
also.
on principle, it should not apply. But if you read 9.1 and 10.1 as you did, and 10 is a method of computation of 9.1, when the supplier provided the levy and the levy is already quantified at a specific rate, only the shifting happens to the recipient and the rate is quantified at 6.
I think we should read it section 10 in the manner that it is a complete code in itself, subject to that 9.3, 9.4 provisions.
So it means you are saying 10.1 should be read as a new levy over and above 9.1.
It is a complete code in itself.
So code means, but the levy is also shifted to 10.1.
Yeah.
That is, as I said, is another viewpoint. Though my viewpoint is the earlier one. That is a second viewpoint. But I think these are some pointers where we need to think on.
Because my point of view is, if we read it, then the composition dealer may take the tax payable under the reverse charge. So 9 will prevail over a 10, and the recipient will pay the tax under reverse charge. Second question, what Unmesh is saying is 9, 6% or 18% on the tax to be levied. I believe both positions are defendable. But if we pay 6%, it's advisable if recipient is not eligible to take the credit. So better pay 18% and take the credit. Third point of view is whether what the Unmesh is saying, 9 will have a subject to. So we should read out a forward charge as well. That I believe. And the fourth question is what the document will be issued by the composition dealer. He cannot issue the invoice. He cannot issue the tax invoice. If he issues a bill of supply, how is going to be disclosed in the return? And how he will going to reconcile the turnover at the end of the day. That's a fourth confusing point.
I think we should make a list of all these questions and have a detailed deliberation, maybe a whole 3-hour deliberation on this, because today it is not pinching, because majority of the people who are in composition may not be facing these complex issues, and also their turnover, the composition limit is low. But I'm foreseeing that maybe in future the government may increase the composition limit to 2 lakhs, 3 lakhs, 5 lakhs, whenever it happens, let us say. I think then these questions would become very important, because then many people would be under the composition slab. And many would be having one of these scenarios.
Practically, I have faced this challenge. So we are registered under the composition, and they have provided the sponsorship services. As of now, I have taken a position recipient is paying taxes under reverse charge, so I will not pay. I am taking a declaration from the recipient that he has discharged the tax liability. And the same subject cannot be taxed twice. So I'm just taking the risk of that.
Yeah, means that is a suggested viewpoint, but if we are analyzing it, it may just have another viewpoint that we discussed. Fine. So, Uniji, this is all from my side. If there is something else, we can definitely take up and discuss.
Yeah, thank you all for attending the 2-day session. Vishalji had to take us for a simple section, which we thought of as section 10. Now, after hearing the various scenarios which he has posed before us, we have to have a relook at the intricacies of section 10. And we just got the clear awareness that the pinpoint accuracy of the conditions and provisions in section 10 is very vital to understand and plan the registration of a dealer. Otherwise, it will have a grave consequence in a later stage. So to think about the various scenarios, which normally casual perusal reading of section 10 won't come to us. Vishalji would have done hours and hours of research to arrive at these various interesting scenarios. So thank you, Vishalji, for enlightening us with these deep thoughts. And we have to think about all these provisions once again, because as you rightly said, there are some issues which can come up when the composition threshold is increased. And perhaps it is better for the government to come up with clarifications or appropriate changes wherever is required, so that even these remote incidences can be taken out of harmoniously within 9 and 10. So thank you all for joining us today. And we'll continue with the SMS with section 12, 13, and 14 next week. Thank you all.
Thank you all. Bye-bye.